morning. My name is Rebecca, and I am the Skills and Talent Strategy Lead at Wired Sussex. So basically what that means is that I get to work with our members to understand the successes and challenges that they have around attracting, training and retaining talent. And then I work with them to celebrate the wins and also to collectively solve the problems around any challenges that we might share. One of the ways that we do that is through our breakfast sessions. So we're running a series of breakfast sessions at the moment on remote offices and what remote working looks like. And this is the fourth in this series. And today we're going to be actually joined by Plus Accounting, who've sponsored the whole series of these events. So it's really great to actually be able to bring you in on the conversation to share some of your expertise around this. So I'd really like to welcome Mark. He, as I said, works for Plus Accounting and he is their business services manager. Mark, would you like to kick off by telling us a little bit about what Plus do?
Yeah, absolutely. Thanks, Rebecca. Good morning, everyone. Hope you're all well. So my name's Mark Horsfield. I'm a manager on the business services team at Plus Accounting. We are a firm of accountants based in Preston Park and Brighton. The company's been operating for about 28 years. It's founded by two partners and slowly grown, over that period. So fairly existing firm, and now we have around about 30 employees. So we carry out, general accounts, tax and audit services for our clients, as well as, some specialist areas, for instance, like video games, tax relief. We have a number of video games clients now. We've slowly grown that sector, especially in lockdown. The gaming sector is quite a booming area. We now have over 100 of those. So that's as well as many other sort of tech businesses as well. And GP offices, franchises, a broad range of different clients. They're mostly based, Brighton area and South East, West Sussex. We do branch to some in London area as well. And we just generally work with, established small, medium-sized businesses, and also those who are owner-managed and new startup business and entrepreneurs. We generally just try to help the business grow and assist with their financial matters as well as general business advice, really.
Brilliant, thank you. I know that a number of our members work with you, and I've heard brilliant things. And I think particularly, as you were saying, it's that knowledge of the sector specific and so I think we're going to go into a little bit more detail now, particularly around some of those costs that the digital and tech companies might now be facing as we move towards this sort of remote working model. So I wondered maybe if we could kick off by you telling us a little bit about what some of those significant costs might be that businesses need to be thinking about as we move either to a full remote working pattern, or I know a number of businesses are sort of doing split, sort of some remote working, some office working. So what are those sort of main cost considerations, do you think?
Yeah, so I think it's a combination, sort of split into two categories really. It's going to be your one-off costs, and it's also going to be a combination of sort of ongoing costs with remote working. I think with the one-off costs, I think the main one is obviously the hardware. It's even though your employees are working from home, they still need to have the right setup to be able to carry on their work effectively. So you're talking computers and laptops and extra screens and extra monitors. You have to sort of carry out a survey as such to work out who has what equipment, and if you need them to work effectively, what equipment do you need to provide for them, or things along those lines. Even just sort of a desk and an office chair and things like that, having the right setup, and they can, depending on the number of employees and staff members you have, it can sort of creep up the costs of that. It can range into hundreds and into the thousands if needed. Another one we found was obviously having, when you do go to remote working, it's having the online infrastructure. We've always had a remote server available, but when it came to lockdown and suddenly we all had to work from home, and we all tried to log on to our remote server, it was a bit of a struggle. We found system wasn't quite at the level that we needed to. We had issues with programs closing and crashing on us. We have a WhatsApp group, and the message is like, is this working for you? Is this working for you? And it was just a case of our system hadn't been, the lockdown was thrust us to working from home because we've always mainly been office based, but we found that we needed to upgrade the system, and I know that is in the region of thousands of pounds to get the remote working. Seems like it's going to carry on for the foreseeable future, especially until next year sometime. We do a combination of office work and remote work, so we need a system in place to be able to operate effectively, either we're in the office or we're at home. So that has been one of the main significant costs we found with developing the remote server, is getting the right infrastructure in place for that. And then you have ongoing costs of IT support if you do go and set up remotely. If there are issues, how are you going to cover those issues? Do you go to an outside firm to assist with your technical support, and do you need to have it on a sort of retainer basis? Obviously, that adds up to the cost of it.
Yeah, it's interesting. We did a session prior to this with Hive, who spoke about some of those like how do you manage that infrastructure, and it's a really good point. So perhaps I could in the comments of this video I can add a link so that people can perhaps see that. And also I think, as you say, with the office setup, we ran a session with Posture people talking about some of the ways that you can maybe hack that a little bit at home. Also, when you do need to start to think more strategically about a long-term sort of plan, I suppose, to support staff in that. But I guess if you say those costs sort of break down so that you're going to have maybe some large upfront costs and then maybe some of these additional sort of reoccurring costs, do you have any advice for how a company might think about that in terms of their cash flow? I guess particularly at times at the moment where companies might be looking at uncertain times. Like, is there any advice for sort of how to approach that?
Yeah, I think just creating a budget, really. I know it's difficult to sort of plan ahead too far, but try to get quotes and estimates in regards to how much you think the costs are going to be, and try and do a sort of monthly sort of budget plan for that. And then as time goes by, then compare the actual costs against your budget to work out if you're under or over, and if you were over, why did you go over, which costs were unexpected, and then you can then sort of readjust your budget. I think very much in this sort of climate, you need to be keeping a tighter rein on your financials. So having a budget in your mind and then sort of reconciling that budget against the actual cost is a good way to go forward.
And what about, are there any things that people could do maybe to avoid some of those upfront costs? I know we were talking a lot about sort of equipment and things like that. Are there ways that people could either defer some of that payment or other options so that they're not faced with this huge sort of lump sum upfront?
Yeah, I think especially with sort of hardware costs, you could look to seek different payment options. Leasing might be a way to go. So there's generally two types of leasing. There's a finance lease and an operating lease. A finance lease is really you buy the equipment, but you spread the cost over an extended period, so 2, 3, 4 years or whatever payment plan you set up. Or and for that, is your asset. Once you make the final lease payment, that is then your asset. And in terms of the tax side of that, even though you're spreading the cost over 3, 4 years or whatever the plan is, you claim the tax relief, so expense against your income in the first year that you purchased it. So you do sort of claim a more upfront way of claiming a tax relief. With an operating lease, it's similar to sort of rental. So you spread the costs over however long you're going to rent the asset. The downside of that is obviously you have to sort of maintain clauses with conditions of the asset and make sure it's not in a sort of derelict state once you reach the end of the term. But again, that sort of spreads. If you don't think you're going to need the equipment if you plan to go back to the office, perhaps renting equipment initially, and then obviously you can then return it rather than spending the whole upfront cost on the asset, and then finding once you then go back to perhaps working in the office, you don't need this extra set of equipment anymore. So that's possibly an alternative.
Brilliant. And I guess, are there any other ways? So I think it's really interesting when we talk about sort of those tax allowances and the tax sort of breaks around that. Are there any other sort of tips of things that people might be aware of that might help to defer that, or or any sort of government support that people might be able to access?
Yeah, I think with sort of the government support, obviously there's a lot of government-backed loan schemes at the moment, which might be of interest to small businesses and medium-sized businesses. For instance, a bounce back loan is one which is coming to the end on the end of November. So there's still applications available for a loan scheme like that. And that is loans up to £50,000. And it's got quite good favourable terms in terms of the interest is only 2.5%. You can extend it for up to 10 years for payment plans, and you don't make any repayments for the first year. So where businesses are on a bit of a downturn at the moment, a loan scheme like that to then be able to fund investment into your business might be a good option for you. I think whatever method you look to do, if you're reluctant to sort of spend reserves because you're keeping them back for a rainy day and things like that, and you want to finance it through either a loan or a lease, it's just to work out the full cost of it, and especially the sort of interest element of it, just to determine how much it's actually going to cost you to get these equipment. So if you have a cost for £10,000 and you want to take a loan, then work out how much extra those charges and interest is going to cost it. It goes to 11,000 or things like that.
And this might be a very ignorant question, but how would someone do that if someone is maybe like a small business and they've never applied for these government grants before, or they're not really used to sort of budgeting in this sort of way? I'm aware that could be quite overwhelming, sort of first of all having to go through that government process and also trying to calculate interest rates, or is there any support that someone could access or any tools that someone could use to work out those costs?
Yeah, I think there's always loan calculations online. You just enter in the figures of the interest and the length of the loan, and it's always a good I know banks and stuff have loan calculators which you can go on and use, so you can just enter in the amounts that you're loaning, the interest rate applicable, and then length of term, and that calculates how the total cost is to acquire the asset. I think in terms of the HMRC loans, there's lots of information online from their website in regards to these loan schemes that they are promoting, so it's worth checking those out, and they have further information on those, and there's a number of high street lenders who they direct you to, so that's information you could use.
Brilliant. And I know we've sort of spoken a lot about this sort of from the company point of view, but we've spoken, Mark, about the financial implications for employees of working from home, and actually particularly thinking of people who might be at home in their flats and the winter's coming, and these Brighton seafront buildings are pretty drafty at times, so I'm sure people's heating bills are going to go up. And I saw that we'd had a question from Hannah's talking about the working from home allowance, and I know that we'd sort of touched upon that, but I wondered if you could maybe sort of explain what that is, both from a company perspective, but also sort of for employees.
Yeah, of course. So obviously working from home, where an employee is sort of obligated to work from home, where they've closed the office or for social distancing, they've instructed employees to work from home. Obviously, the employees' costs are going to go up through, as you say, gas, electric, and all those sort of utilities costs there. So in terms of reimbursement, from the employer's side of it, there's no legal obligation for them to reimburse their employees for household expenses. It's very much a decision between the owner-manager of the business and the employee themselves, whether or not you compensate them for working from home. So that is... There isn't, so the options are in terms of reimbursing them. So there's two methods you can use to reimburse for them for their household expenses. So HMRC allow for a standard rate, which is up to £6 per week. So that could be paid tax-free to the employee, and there's no sort of requirements to determine what costs they've actually had. They could just be paid as a tax-free payment to the employee. It doesn't need to go on a payroll. It could just be paid out of the company account and paid directly to the employee. And then the employee can then deduct that cost as an expense in their company account. So they would get the tax relief side of it as well. The alternative would be to do a more enhanced claim, and that takes a bit more work. So it requires you adding up all your sort of household costs, the gas, electric, water, internet, telephone, all those sorts of things. So add up to get the total cost of the period that you're claiming for, and then work out how many rooms you have in comparison to the rest of your house. So if you have a 3-bedroom house with 1 living room and you allocate one of those rooms as an office, you then take a quarter of those costs. And then once you've taken the quarter of it, you then work out a business percentage based on the amount of time you actually spend there. So if you did a normal 5-day working week, you'd take probably 5/7 out of the total costs and get the allowance there. It sounds more complicated. I'm probably making it sound more complicated than it actually is.
That makes sense.
If you're considering it, it's worth weighing up between, even if you're claiming for yourself as a director of the company, it's worth calculating it to see which is more beneficial for you to claim.
Can I just ask one question on that specific? Because
yes, please do.
Because where I'm confused is, I know that there's a £6 per week allowance that's tax-free. Yeah. So you're saying you don't have to put it on the payroll. But if the company decides to pay more, say, for example, they say, we're going to give every employee £50 a month, just for argument. So does that become more complicated in terms of tax, NI and or actually you can still do it in the same way?
Yes, it becomes slightly more complicated. If you wanted to pay them more, there would have to be justification for it. So in a way that they would have to have bills and stuff, there had to be this enhanced calculation to justify this reimbursement. Because it's reimbursing them for costs they've incurred, there should be these costs shown to verify that. So yeah, you can pay more than the £6 per week, but where you do, you need to have justification of where this money's gone and what it's been reimbursed. Where if it's reimbursement, then it's not a taxable item. But if you're just paying them an extra amount with no real justification for, then it starts getting complicated in terms of taxable benefits and extra tax and NI costs on those.
Thank you. That's really helpful. And I'm sure that is something which is going to be hot on employers and employees' minds in the coming weeks. I don't know if there's any more questions that anyone has. I'm aware that I've sort of dominated Mark's time a little bit there. So I'll give you a moment to just think if you have any questions. And just wanted to flag that Hannah had said when we were talking about sort of the cash flowing and the loans, that Swoop provide an excellent service for this. And also actually, I know Hannah's company, a cash flow predictor as well. So what I'll do is pop a link to those in the chat for this video as well, and also pop it in the follow-up email so people have got all of those links. So I don't know if anyone else has any other questions that are sort of burning in their minds. Otherwise, I guess my only other thought, Mark, was sort of, I guess, looking towards the next financial year. Do you think there's any sort of, as the year end rolls around and we're looking to the next year, are there any sort of final considerations that people might have for their budgets for next year, or do you feel that you sort of covered everything there?
Yeah, I think with sort of budgets of the future, I think it depends on your circumstance at the moment. If you are solely working from home and you've closed an office, it's sort of, I know it's difficult to sort of plan ahead, but what are your plans in regards to the office going forwards? Do you plan to, when hopefully this COVID issue settles down, to then look to reopen an office? If you then looking to reopen an office, are you looking to sort of do a dual like we do, where you have an office operating and then have remote workers, because you sort of have extra costs rather than any cost savings? So that's probably a consideration of it. And if you have sort of given up your office to work from home, but then want to use a new office, are you able to find a suitable office space for all your requirements? And is it going to be cost related? Unfortunately, I think the way it's going, that there might be plenty of office spaces available. So you might find that there's cheaper options available. Or if it's just a case.
Sorry. If someone does close their office, what are are there any sort of key things that they should be bearing in mind for the costs, or the ways to do that in a most sort of cost-effective way, or or maybe sort of some pitfalls that might come from closing an office that you may not have considered, sort of any sort of early repayments or sort of?
Yeah, obviously it depends on the lease agreement that they have. So if you were considering of closing a lease, you need to check the terms and conditions of the lease to see if there is any charges associated for early closing, or if you know your lease is coming up to the end soon, it might be a case of you try and renegotiate your lease, or you might then look elsewhere. I'm trying to think. Yeah, trying to think.
Brilliant. Well, if there's no other questions from anybody, and just having a quick look around, I think that you've given us such a whistle-stop tour of so many sort of gems of advice there. So I'll make sure that we get this video sort of sent out to everyone as soon as possible, so that you can listen back and sort of fully absorb everything that Mark has shared with us. Mark's kindly said that we can include his email address when I send the video around. So if anything has come to mind after this call, or when you watch the video back, then please do get in touch with Mark. And I guess that just leaves me to say thank you very much, Mark, for your time today, and thank you to Plus Accounting for sponsoring this whole series of breakfast sessions. I think we've managed to cover so many things that I know are real sort of challenges for members at the moment. So thank you for supporting us in doing that.